We are back with another banger, this time on EU with a 3R trade on the MEC variation. All the previous ones were on NQ, but this one was on EU. This works on a lot of different pairs, this model. And we're going to go through exactly why I took this trade, how I got the bias, how I got the entry criteria, everything fully mechanically, zero discretion at all, entirely mechanical. Literally a 4-year-old could probably execute on this model. It's so simple. And we're going to go through everything in this video. So the first part of the model is establishing the bias. Where do we think price is going to go? Do we think it's going to move up or do we think it's going to go down? Now, the easiest way to do this, and this is the way that we do this in the model, is by using the 4-hour time frame, and I'll show you in just a second. But before we do that, the reason we need bias is because we're trading with the trend in this model. There are a few models that rely on retraces and going against the trend. For us personally, we are trading with the trend every single time. So if the trend is bullish, we're going to be taking longs, and if it's bearish, we're going to be taking shorts. Now, the way that we do this bias on the 4-hour time frame is so simple, unbelievably simple. The most simple way I found to do bias ever, pretty much, is install the fractals indicator by Rachel T, and then look for the most recent break of structure to a fractal. Take the most recent fractal. Was there a break of structure, which is a candle closed below a low or above a high? No, there wasn't. Go to this one. Was there a break of structure? This candle closed above, so we're bullish. It's that simple. If market open was here, the most recent fractal right here, where it would have been this one, no candle close. This one, was there a candle close? Yes, below it, so we're bearish. It's that simple for the bias. That is so simple. But now we've established our bias, which is bullish, we need to mark out the previous session low. So we're going to mark out the previous session, which for me in the UK is midnight right here. We're going to find the lowest point in this session between these two little lines. You can use an indicator, but I like to just draw it out myself. Is find the lowest point, which is here just before market open, and draw it across. If you're on your phone at work or whatever, just set an alert on this line, and then we're going to wait until we get a sweep of this liquidity. The whole idea of this model is that we are overall bullish. We get a sweep of the lows, a bit of a confirmation, a bit of a retrace, and then rip all the way up. That's what we're trying to get. So the whole premise of this is establish we're bullish, wait for the previous session lows to get swept. So we've got all of this liquidity to get swept, and then we can rip up right here. So once we have come into the market, we're going to be waiting for the previous session sweep. So you can just wait, you can just sit through and wait until you get the sweep, which we get the sweep right here. As soon as we've had the sweep, we're looking for the next confluence, which is a fake out. Now the fake out is a fake move in our direction, followed by a move back down to stop out the people that got too early, and then an actual continuation on in our direction. Now the way that we do this is by waiting for the first 5-minute bullish candle to form, or the first 5-minute candle in your direction of the bias, which for us was bullish. As soon as we've got the first 5-minute candle, what we can do is draw the fib range from the highest point in the previous session and the current session, right here, all the way down to the bottom of the bullish candle. Now this is an interesting one because this is the manual fake out. Now this is not very common. A lot of the time, the bullish candle will close out of the zone right here. And that's completely fine because then we need a tap back into this zone. So this 0.079 zone is our fake out zone. So once we've established this move up, we're looking for this tap back down into this zone to like establish the fake out basically, so that we can then continue on in our direction. Now in the event that a candle closes inside of this zone, it gets a little bit complicated, because if we just waited for the next one to tap in, this candle's in this zone, which means the next one is going to spawn in this zone, which is an instant fake out, which is not really what we want. You don't really want a confluence that instantly fakes out. So in this event, it's a little bit more discretionary, but not too much, is you need to draw a box from around 33% of the bottom of the candle, and that is going to be the fake out zone right here. So around 33%, wherever you think this is, probably about here to be fair, is I'm then waiting for price to tap into this zone right here. So I'm going to wait, and we get this tap. This wick into the zone is completely fine. That's exactly what we want to establish the fake out. Now, as soon as we've had that fake out, we can move on to the next part of the model. The next part of the model is the confirmation that we're actually going to move up. So we've had this little fake move, and now I want actual confirmation that we're going to move up in our direction. And the way we do this is a break of structure, but not just any break of structure, a break of structure to a fractal. So I'm going to delete the little fib range and the little fake out zone because now we've faked. I'm just looking for the most recent fractal to get a break. Now, the most recent fractal is here, but it seems unlikely that price is going to actually come all the way up here. It's probably going to create another fractal by then, but that's fine. So we wait. We've maybe got an alert on this fractal, and we're just going to wait. We're going to play price through. Cool. Now we've got a more recent fractal. So this is our new fractal. We can get rid of the old fractal. We need a break above this one. Now we've got an even more recent one. We move it to this one. Do the exact same thing, and now we wait. Now we got a wick. Doesn't count. We need a full candle close. So we're just going to wait. We've got a new one right here. That was a phantom one. Got to be careful of the phantom ones. That spawned and then disappeared. So for us, we still wait for this one, but we got a candle close here, and that is all we need. So now we are ready for the actual entry confluence of this. So for the entry, we use the fib tool, and the fib tool is absolutely legendary in this model because it does everything for you. It does all the work for you. You draw it from the lowest point all the way up to the highest point after the breaker structure. And you can see we have a few things on the fib tool. We've obviously got the 0.079, which was the fake out zone. We've got this Goldilocks zone, which is between the 0.5 and the 0.618. This is where your entry is going to be. And then we've got the 1.025. Don't worry about the 1.1. We've got the 1.025 right here, which is our stop loss line. So we're just going to wait for price to come down. If it extends the range, that's fine. We just follow it up once again. And now the zone's moved up, completely fine. We wait. Moves up again. We extend the zone. And we got the tap right here. Now you would have a limit order on the 0.618 right here. You can have it anywhere between the 0.5 and the 0.618, but I always have it on the 0.618. And you are going to target a fixed 3 risk to reward every single time. Right there. So set that on 3 and wait. That's the model. That's literally the model. Wait for the tap and then wait. And you can see right here, if I let price play out, we hit a full 3R right here with potential to trail as well. You could have trailed this to a bit higher, to a bit more R, maybe like 4R or something like this. This just continued to rip. But look at the entry. This is the whole point of the 0.618 sniper entry. And that's why it's called the tap and barrel, because it taps and then it barrels to TP. And you can see right here, this entry is pretty precise. You couldn't really get much better of an entry right here. You've entered here, stop loss is just under here, nice and tight, and it flies all the way up to there. So that is the full model. That's the full entry model. I will show you the fib settings on here because this is the godsend right here. My face is in the way. Let me move myself out of the way. So we've got the 0, 0.618, 1, 0.5, 0.079, and the 1.025. Don't worry about this 1.1. This is for a different kind of variation. But for the most part, this is all you need to know. So that was pretty much it for that model. Hopefully you guys enjoyed it, and I will catch you guys in the next one.